Well, welcome to this KPMG Africa Conversation series coming to you live from the Wild Coast Sun here in the Eastern Cape, where the KPMG Africa Partners Conference is in full swing. For the next hour, we'll be focusing on executing strategies across the African continent. And of course, we are also joined by our international audience through webcasts. So welcome to you as well. The title of what we'll be doing for the next hour, Been There, Done That. And joining me in studio, Michael Andrew, who is the Global Chairman of KPMG International. We're joined also by Peter Stauder, the CEO of Tongaat Hulett, Leslie Marsdorp, who's the President, Bank of America, Merrill Lynch, Southern Africa. Marlon Chikwenda is the Managing Director of Carlyle Africa, and Kumo Shoinwane is the Group Chief Strategy, Merger and Acquisition at the MTN Group. Thank you all for joining me. Let's start, Michael, with your Africa strategy. KPMG has spoken extensively during this conference about the One Africa strategy. You're executing that, you're in full swing. What is the overall mandate at this point?
Well, the overall mandate is to be number one or two in Africa. In that sense, we know our strong sort of local market position, which now by basically leveraging the combination, we hope to produce some real synergies and drive to basically make sure that we outgrow the competition.
Now, Peter, you've been conquering the African continent with Tongaat Hulett, specifically the SADC region, and you're passionate about that region. How long has it taken you to gain traction as a business across SADC?
I think when you look at our business model, and for us it's generally a conversation about Africa, when you get a few Africans together, they get all enthusiastic, as they should. They see plenty of possibilities and opportunities, as you should, because it's all around you. At the end of the day, though, and that's what we pride ourselves as an organization, we pride ourselves that we've got enthusiasm, we see the possibilities and the opportunities, but then we actually run the marathon. And we don't just run the marathon, we win the marathons itself. A good example would be the way we went into Mozambique. We went into Mozambique during the 90s, after the two wars that took place, at a critical place for Mozambique. And we started to run the marathon in Mozambique. Last year, we increased sugar production to 42% in Mozambique. So that's our style. So we see ourselves as winners of marathons in a continent full of possibilities and opportunities, but where you cannot overemphasize all the issues that you need to do in terms of implementation to be successful.
Marlon, to you in Johannesburg. So Carlyle is one of the biggest groups, private equity groups globally, and 15 months ago you embarked on your private equity strategy in Africa with offices in Nigeria and Johannesburg. Can you elaborate on what the last 16 months has brought for you?
Yes, thank you, Bronwyn. I would say the Carlyle entry into Africa is really a story about growth. If you look at the growth rates across sub-Saharan Africa over the last 10 years or so, the average growth rate in terms of real GDP has been 6% per annum or so. And when you look at that growth, the quality of the growth is really what has attracted us as a global institution to set up our Pan-African Fund. 2/3 of that growth has come from increasing domestic consumption. So as the economies grow, there's more money in the pockets of consumers. 1/3 of that has been commodities related. What we've done in terms of our strategy over the last, call it 16, 18 months, is, as you rightly say, we've set up offices on the ground in Johannesburg and Nigeria. I think we'll set up an office over time in East Africa, and we really see those three centers as the hubs through which we will be looking to explore sub-Saharan Africa.
Well, Leslie, you've been exploring sub-Saharan Africa for some time. What do you see as the key challenges at this point?
So I think most of my colleagues now have referred to Africa as the opportunity, if you like. I think it's important for us to begin to talk a little bit more detail what are some of the levers that could unlock even greater potential? And the way I look at the continent, I'd say one of the key blockages for further economic growth is power. The total installed capacity of electricity, power capacity on the continent is about 68,000 megawatts or 68 gigawatts. That is the equivalent of Spain, the equivalent of one country on the European continent. That gives you a sense of the distance we still have to travel as Africa. If you look at the size of GDP, Africa's GDP output is about 1.6 trillion. That is the size of Brazil or Russia. So whilst Africa represents major opportunity, I think there are a few major stumbling blocks that we have to address. The first one is power. The second one, I would say, is just broadly infrastructure. I mean, to move goods between countries, trade is incredibly costly as a consequence of lack of rail infrastructure, ports, inefficiencies, and so on. So the second major area, in my view, is just the upgrading of infrastructure of all types. Then the third and final area, I would say, is skills. We have a significant skill shortage, not only in this country, in South Africa, but on the rest of the continent.
Kumo, back to Johannesburg. MTN is well known for its aggressive Africa strategy. Are you still excited about that opportunity?
Absolutely, Bronwyn. We still think there's huge growth potential on the African continent. Clearly, it's not quite the same as we've had over the last 16 to 18 years, when we're initially getting into the markets and penetration levels were extremely low. We've got a situation now where penetration levels are far higher, probably an average of 50 to 60% across the continent. So by virtue of that, the growth rates in terms of voice are certainly coming off. But as that happens, we see growth potential in other areas, especially in the data side, in terms of data services that we can be providing. So we see some huge potential in that space across the continent.
Michael, let's come back to you. When we talk about challenges on the continent, what would you say has been the key impediment to the KPMG Africa growth story?
Well, it's more a function of Africa. As I said, we've got 54 diverse regimes, means different tax regimes, different markets, different corporate governance. So it's not possible to seamlessly look at one single market. So as a result of which, you've had to make sure there are very localised services in each one of those particular markets. And that's a big investment and a big cost. And, it's taken us a while over time to develop the right models to respond to that. Now what we're starting to see is more clustering or consolidation in Francophone Africa, in West Africa, East Africa, South Africa, and Lusophone Africa. And we're more or less following that model.
Perhaps we can get some insight, Peter, into executing a company strategy, a single company strategy across multiple territories as you have within the SADC region.
I think for us, obviously, depending on what industry you operate in Africa, you've got a slightly different dynamic. I was pleased this morning listening to the KPMG executives talk about their customers. Obviously, for them, that's a very important and the cornerstone of their business. Where we operate in agri and agri-processing. And in that particular area, you operate in rural communities. And you really learn that when you want to operate in Africa, there's always this buzzword that says great stakeholder value. People like to say it sounds nice. But what does it really mean? And who really are your stakeholders in your business? So we learned over a long period of time today that when you operate in different countries, you need to tune into the community issues, for example, where you operate in the rural areas. You can't treat a community the way you treat another corporate. In another corporate, you can go to the board, you can go to the CEO. It's a very different interface to understand communities and how do you interact with them. When you interact with communities, you have to interact with the government because you're partners there. Vice President Majura and myself, we are patrons of a big private farmer grower scheme in Zimbabwe. She talked about a tripod there. But if you don't get those elements right in our industry, for example, you can't make progress. Because if you can't get the community on your side, you battle. If you don't get the private grower on your side, you battle. So what I've found going through all our expansions where we do very well, by the way, in all these countries, we're today the largest single employer in Zimbabwe and we're the largest single employer in Mozambique. That's a good track record. But to do that, you've got to realize, like any good implementation, it is multifaceted. And in that multifacetedness, you've got to deal with all the underlying issues. and work with all your stakeholders. I would say that's the one big lesson we've learned over the last 10 years.
Leslie, earlier in today's session, I borrowed from a quote from a member of the World Bank who said that the Africa train has left the station. You need to be on it or you risk becoming irrelevant. Do you think that there are a number of companies out there that stand that risk, that aren't taking opportunities of the Africa story?
Absolutely, Bronwyn. I mean, I've got little doubt that every major multinational out there, and I should emphasize, not only in natural resources, but every major multinational is looking at Africa in a very different light today. One of the interesting statistics, and there were a number of statistics flashed on the screen earlier this morning, that I saw a week ago was the UN projections on population. Africa at the moment, we've got just over a billion people, or some say just under a billion people, but we are projected to have 3 billion people by 2050. What that means is that Africa will in fact have the largest workforce in global terms by 2050. Now, just to put that a little bit in perspective, because these are large numbers, by 2050, India is projected to have 2 billion people. China, on the other hand, which at the moment, as we know, is the largest country, will peak at 1.4 billion by 2020 and start declining. So any company that is involved in consumer, in retail, financial services, I mean, Africa is really the growth
Can you
story.
categorically say 10 years from now, Africa is going to be bigger than China?
Not 10 years from now, but certainly all the projections from the United Nations who do all these studies suggest that by 2050, we will be 3 times the size of China.
Well, there you go. The stats are being bandied about aggressively. Marlon, let's go back to you. And going back to your 16-month strategy on the continent, East Africa must be a key region for you in the next phase of your rollout. Which country are you targeting? I would assume it'll be Nairobi from a Kenya perspective. And further, are you relatively cautious? Because we have seen some South African companies failing spectacularly in the East African market, and case in point would be SAB.
Yes, I'd say East Africa is a crucial market for us, and it's taken a lot of our focus over the last 16 to 18 months or so. I think it's one of the more integrated markets on a Pan-African basis, and that's certainly how we look at it. I think when we look, as I stated earlier, one has to be very careful when one talks about Sub-Saharan Africa, because you are talking about many different countries, and so you need very specific countries, very specific strategies by region and actually by country. So it varies hugely. So while I think the macro numbers are very good and very positive and they're very good tailwinds, one has to be very specific and very focused, almost on a country-by-country basis. Specifically within East Africa, I wouldn't say that we prioritize one country over another. I mean, typically as investors, we will look to the larger economies. The largest economy in East Africa is clearly Kenya, so that's a key focus for us. But equally, Tanzania, Uganda, and some of the other countries are as important for us.
Kumo, MTN is obviously focused, or the focus on Nigeria is what analysts say leaves the company with the rating that it demands at the moment, in that there is huge growth potential in that territory. Now, it's big. Nigeria is already big in the life of MTN. Is it, however, from your perspective, are you just scratching the surface at this point? So the potential growth is enormous.
If one looks at Nigeria, absolutely the growth potential is enormous. We sit at penetration levels only of about 50 to 60% in Nigeria. So clearly there's still significant growth potential there. Going into rural areas, we're obviously still a large player, a very large player in Nigeria, and we've got pretty extensive coverage. But there's still scope to grow in a number of the rural areas in particular, and increase the growth potential in some of the urban areas as well. So our view is that there continues to be very significant growth potential. It's the largest market in Africa. It will be very soon be the largest economy in Africa in a number of years, I suspect. So it's definitely a very important market for us, and one that we focus on very strongly.
Peter, if we can bring the conversation back to you, if you look at the trends across the continent in terms of themes, growth opportunities, much has been said about the resource opportunity, also about the ICT environment, as obviously MTN is just bearing testimony, also the consumer story, but agriculture is now taking center stage. Are you going to be riding that wave as Tongaat Hulett?
Look, I think, first of all, the pace of agriculture in Africa will be slower. The potential is even bigger than in some of the other industries. What you have to recognize, though, to do well in agriculture and agri-produce, you have to pull a huge stakeholder base with you. And sometimes you need the readiness in that stakeholder base to really make the progress. And if you run ahead of them, you have a problem. And that's why in Africa there's a lot of effort being put into agriculture. But people don't sometimes understand the basic practical things you've got to get behind you to make the next step. When you do that, you can make enormous progress. In the last year, we've had a model, for example, in Zimbabwe, where we've established more than 4,000 hectares for the farmers. But sometimes these things are very basic. There was a television investigator report in Mozambique the other day, and he interviewed the one Mozambican cane farmer. She farms about a hectare for us. When I say for us, she was complaining she was very bitter. She was very upset. She said, Tongaat Hulett pays me per hectare. When I interviewed our country head in Zimbabwe or in Mozambique, and he's very passionate about Mozambique, he was asked, do you pay per hectare? He says, no, we pay per ton. And he got very angry at this lady. But what was happening is the conversation between stakeholders in a different space. She was actually farming, for example, 1,000 hectare area where there's an association for all the small-scale farmers. Now, they pay their people per hectare. And she was bitter that next to her, let's say, the lady wasn't farming that well, she was farming well, why should she get the same pay? But often you have to overcome all these steps. What we see in Africa today, when you look at the agriculture side, it's a different pace in the different countries. But in all of those, there's a possibility today where government, NGOs, the small-scale farmer, and the corporates who can tune into the dynamics of that country can make really substantial progress, because it is the one part in the world where there is still a lot of water, there's a lot of arable land, and there's plenty of opportunity for growth.
Michael, are your teams positioning themselves around the agriculture opportunity as well as oil, gas, the ICT, and the consumer story?
Oh, very much so, and it's a classic case of what Peter said, following your customers, listening to the opportunities, and in particular East Africa is seen as being a tremendous food bowl in the future. And it's also interesting, having a global perspective, it's fascinating for me now to see a lot of Indian, Chinese investors coming in and actually looking at the models that have worked in their countries and seeking to apply them into Africa, and partnering with a lot of rural communities in the same way they do in their countries. So a lot of these business models are actually transportable across border.
Leslie, let's get a little colour about how US investors are viewing the African opportunity. Are we still a little far removed from their thinking?
Look, I think Africa remains, historically the continent has been a very important source of a destination for US investors. It remains so, but there are a number of areas where African economies have not developed up the value chain. Give you an example, only 1% of manufacturing, we contribute 1% to global manufacturing. So it's impossible for a large high-tech US firm to establish unless the skills base and technology exist here. So I think there are a number of reasons why Africa remain important to the US economy. First and foremost, obviously, natural resources. So there are all of the big oil
When you
majors.
say remain important, are they deploying cash? That's what I want to know.
Oh, sure. I think you haven't seen after the Walmart deal, which was probably the last big major multi-billion-dollar investment in South Africa, you haven't seen another big-ticket item yet. But there's significant investments that I think is going to happen over the next number of years in the oil and gas sector. You might know that there's been significant new natural gas discoveries off Mozambique, Tanzania, Uganda, the entire East African bloc. And you're going to see, I think, significant US multinationals moving in there again. So resources will continue to dominate the focus of the US companies, but we have to ensure that we begin to move into the more value-added sectors such as manufacturing.
Kumo, I want to come back to the regional discussion, and as we've already highlighted, Nigeria is always the significant pressure point when it comes to your results in terms of the growth opportunity. What is happening in East Africa from an MTN perspective? Are you battling to get traction in that territory, or is it all systems go?
No, it's very much all systems go. We have been for a long time a player in Uganda and in Rwanda. We started there in both countries quite some time ago, over 10 years ago. We're about half the market in Uganda and probably about 70% of the market in Rwanda. Now, we've also got a small presence in South Sudan, which came about after the split, with South Sudan counting as part of East Africa. It has been more challenging to get into some of the other markets. So obviously the key market in that region would be Kenya, followed by Tanzania as well. The issue with us is that obviously we're in a regulated industry. It all comes down to whether there's a license available and also whether one looks at the market and sees potential to be a significant player, either number one or strong number two. Our view is that in Kenya, clearly those positions are taken up. Safaricom is a very, very dominant operator in that market, and there's a strong number two player. Similarly, in Tanzania, we've got some of the very biggest operators on the continent outside of MTN operating in that market. So the scope for an opportunity for us to get in there and actually become a reasonably sized operator are low. So we're not actively looking at opportunities in the other countries in East Africa at the moment. But like I say, we're a very significant player in Uganda and in Rwanda.
Marlon, we know that debt relief 2001-2006 was widespread across the African continent, obviously originating from the Paris Club. At this stage, African companies and African countries are able to raise money relatively cheaply. But perhaps the question now is, how long will investors give for that delivery, for the promises to come to fruition? That must be a key question that investors that you interact with globally are asking. Is Africa going to deliver on its promises? Is Africa going to deliver?
Yes, Bronwyn, I think that is the multi-billion-dollar question. I think, as I stated at the beginning and as others have said on this panel, the historical growth over the last 10 years has been very strong. Only India and China have grown faster than us. And looking forward, it's projected to continue to be strong. I think only China is projected to grow faster than Sub-Saharan Africa as a region. But what you say is absolutely right. I think there is a clear gap between perception and reality when it comes to risk and when it comes to investing in Africa. Clearly, there is risk on a Pan-African basis, but the question is the risk as high as investors on a global basis currently perceive? I'd make a sweeping generalization to say that risk premium that has been required of Africa in the past is reducing. I still think we are very much, as a continent, in delivery mode. I think there are, when you speak to international investors, there's a lot of interest in the Africa story, but there's also a lot of caution. And typically people are starting to get the message that most of the economies now are actually growing relatively quickly compared to a lot of our global peers. But there are still one or two countries that cause international investors room for pause and room for thought. I do think that will change over the next 5 to 10 years, but it's very important that the strategies that we currently implement and those of us on the ground working on a Pan-African basis really do deliver for our investors over the next 5 to 10 years.
So to borrow from Fed Chairman Ben Bernanke, can I use the term cautiously optimistic? Investors are cautiously optimistic over the African continent at this point. It's still with you, Marlon, but I'm going to move quickly to Michael.
That's absolutely right.
I'm going to move to Michael in terms of whether those strategies, the strategies that you are deploying, you're seeing the returns coming to the fore.
we are, and it was interesting just listening to Leslie talk about, the power and utilities and talk about infrastructure and, talk about the financial services capability. And what we tried to do is measure pretty much, we know at what stage the economy starts to require the sort of consulting services we have. And the art for us is to make sure that this capability is on the ground ahead of the particular wave. So in countries where we have relatively mature markets, the returns are quite easy to demonstrate. But in the startups, there's a lot of investment that's actually required to get your core capability on the ground, to have delivery models which actually can take your intellectual property that you've developed overseas and bring it and then adapt it to that marketplace. So we're certainly seeing growth, but we'd like to see more in terms of margins, which is natural in terms of where this is as a developing set of nations.
Peter, I come back to the success story that you've created in the SADC region, and now that you've conquered that territory, what are your aspirations beyond SADC?
Look, I think, first of all, we've still got an enormous opportunity in this region. We sit as a company with 2.5 million tons of sugar capacity. We're only producing 1.3 million tons. Now, the gap between the 1.3 million tons and the 2.5 million tons is all in the area of the farmers. So you can see that marathon that we're running with the farmers, our own farming, with the government, with private farmers, how important it is. That extra million tons of milling capacity we're not using is more than $1 billion, by the way, in terms of investment itself. At the same time, we're moving out. What we've learned, you asked earlier the question about risk. Many people in Africa confuse risk with poor execution. So they try to do something, then they copy what they've done somewhere else in the world. And they haven't tuned into what are the local dynamics, and to be successful, how do you do it well? Then they make some basic mistakes. Then they say it's a risky place itself. So again, against that paradigm, we as an organization, while we're running in SADC, we are cautiously exploring and getting to know a lot more of the other African countries. We know, for example, Nigeria is a place where people are still importing starch and glucose, where it's a great cassava and maize growing area, and it's got a great growing conditions for cane. So we know all those possibilities are there, but we know there are a few steps to do to eventually execute it well.
You're watching the KPMG Africa Conversations series, coming to you live from the Wild Coast here in the Eastern Cape, where the KPMG Africa Partners Conference is in full swing. We're examining the execution of African strategies across the continent, the title being Been There, Done That. We're taking a short ad break. We'll see you on the other side.